Hey, what's going on, everybody? Welcome to another episode of the Rapid Review. I appreciate everybody joining live on YouTube and on X. As always, the chat is open, so feel free to drop any comments, any questions, agree, disagree, or even just say what's up in there. As always, we'll be breaking down overall market, leading themes, industry groups, just basically everything that's going on in the market to get you guys ready to trade for next week. We're going into the last trading week of the year. And yeah, it's been an interesting week. We had a lot of chop, battle around the 50-day simple moving average for both indexes. And like I said, we're going into this last week of the year. So without further ado, it's time for the rapid review. All right. What's going on, Daytona? What's going on, Chad? Happy holidays, everybody. All right. As always, we'll get started with the disclaimer. Educational, informational purposes only. You guys know the deal. Read through that. You have been warned. A current state of the market, uptrend. We are currently in an uptrend. Looking at the distribution days, actually, I did not update this. That's my bad. But here we go, coming over to the distribution day tracker. So right now we're looking at a total of, we got 1, 2, 3, 4, 5, 6, 7 distribution days in the S&P and a total of 5 distribution days on the NASDAQ. So again, I've said this every single week. I'll repeat again for anybody who is newer. My distribution days might slightly different from what most people look at, which is IBD. It doesn't have to do with the rules. For the most part, it has to just do with volume, different volume sources. Volume is very interesting when you look at it on the indexes, different platforms I try to use to kind of get an overall consensus. But this is where I'm at. It doesn't make much difference overall in terms of my overall outlook. I do compare the two. Just so you guys know. But in terms of what went on in the S&P, we gained a distribution day down on volume on Wednesday. That was a really, really weak action day. We'll look at that on the charts. And then we actually dropped the November 13th distribution day yesterday, which was Friday. And that was just due to time, 25 trading days since that close. In terms of the NASDAQ, we also gained a distribution day on Wednesday, very similar action. We dropped 2 distribution days, though. We dropped the 11-12 and the 11-13. That was on Thursday and on Friday, bringing that count down slightly. So where we're sitting at right now, the S&P is going to lose both the November 17th and the November 18th distribution days, both due to time next week. As you guys can see, we're sitting at 23 and 22 days since that distribution day. 25 is where it will drop off. We do need a big move if we're going to see anything drop from price action. And to be honest, it's really just this 12-17 day on the NASDAQ that possibly could see that drop off. But other than that, like, not very likely we're going to see any more distribution drop off. The big thing, though, we're starting to see it clear up, but for a while it felt like every distribution day we were looking at for the most part was negative. That's definitely something that I pay attention to. That means we're below that distribution day. We've seen that selling off. That selling is definitely feeling more real versus when we see that sell off and then we start to climb above that. Just something that I keep an eye on. So kind of starting to gain some positivity on some of these days, but we're really just like kind of hovering around there. Other than that, let's look at the week. S&P flat, 0.1% up. NASDAQ slightly better than flat, 0.48%, and Dow down 0.67%. For the year, S&P up 16.20%. NASDAQ holding that 20. Going into the end of the year, up 20.70%, and the Dow up 13.14%. What is going on, Brian? Hello. So be cool. We'll see. Let's see. Can the NASDAQ hold up going into the end of the year and hold that 20 above that 20 mark? But yeah, we'll see. Moving averages. All right. So moving averages, despite the fact, and we'll look at this more on the indexes. Despite the fact that the S&P and the NASDAQ both broke their 50-day simple moving average intra-week, we did close above those areas. We also had, we're above all right now, but the big thing was the week the NASDAQ was able to retake its 10 and its 21 day. We started off the week below those and we retook those. And the S&P was able to retake its 10. We started off below that. We retook that. But again, right now we're green on all and above on all and sitting in the right order as well. All right, so let's jump over and let's take a look. As we always do, we'll start off with the NASDAQ, zoom in a little bit for everybody. Just overall, another kind of choppier week. Volatility has started to tighten up a little bit, and I'll talk a little bit about that towards the end of the analysis. But really, the big thing, we started off the week. Where are we going? Started off the week ending where we were finding support the prior Friday at the 50-day simple moving average, but we had broke below the 10 and the 21. That was a really, really rough Friday going back onto the 12th. And then on Monday, we got the first break of that 50-day simple moving average, showing that support was not working out. So that was definitely a negative way to start off the week, but the volume was lower than the prior week, so we didn't gain any sort of distribution. And then you can see as Tuesday, we kind of tried to follow up intraday. You can see we tried to get above that 50-day simple moving average and were rejected. Wednesday, really, really, really tough day for the bulls. Again, trying to get back above that 50 and then just completely rolling over, closing pretty much at the dead low of the day, volume rising, huge selling coming into the market. So really negative to see that now, another rejection at the 50 and then a huge sell-off with that coming on high volume. So this was a really, really negative day. That was the distribution day. Thursday, kind of a little mixed. I talked about this a little bit in Discord, right? We saw the big gap up, very, very positive open. But then intraday, it was kind of a choppy day. We saw that we tried to get above that 50 and yet again was rejected. And we just kind of chopped around sideways inside this bar right here. Ended up basically closing slightly below the open. But the big thing for me was the volume was super low on that big gap up. And then that rejection at the 50-day simple moving average. Those two things, I'm like, as positive as the day may have looked, were two glaring things to me to say, like, there was no volume in that gap up and we couldn't get above a key level and got rejected there. So Friday, this is where that strength returned for the bulls. We surged and got back above the 50, the 10, the 21 and the 10. Now, mind you, they were starting to converge, so it's not like it was still a big surge, don't get me wrong. And we had a ton of volume showing up. But the big thing to note was that we had quad witching day. That's where that volume was kind of coming in from. If you don't know what quad witching day is, that is the expiration of stock options. What is it? Hold on. Stock options, stock index options, stock index futures, and single stock futures. All those contracts expiring, leading to a ton of volume right at the close on the Friday. So that's where that big volume spike is coming from. So look, we had a lot of rejection. We broke the 50 to start the week. We had a lot of rejection at the 50. We had this really high volume sell-off. We have a big up day, 2 up days in a row that we regained those moving average with some volume questionable because of quad witching day. Yeah, overall, it's one of those things that, like, it's not great. It's also not really that bad at the same time. I kind of talked about this a little bit in Discord for those of you guys that are in Discord. We made these lower lows, right? We pulled back, broke the 50. Everything looked kind of crappy. We rallied into this holiday week where volume was very low, got back above those moving averages. And then we just kind of seen ourselves just start climbing. And I had said it would be very likely to see some sort of a tightness at very least, which, if not a pullback, as we're coming off of these lows, as we're coming towards those all-time highs. It's just, the market's going to take a breath. It's very likely not just going to completely rally straight through into those all-time highs. I didn't think it would be as rough as this. I thought we'd probably have a little bit more of a lower volume pullback. I didn't think we'd gather so much distribution in that pullback. And I didn't think we would break that 50-day if we were going to continue higher. So we got that kind of pullback, but it was definitely more aggressive than I had it expected. But we just, follow what the market shows us and take it day by day. So, couple things I'm noticing, right? The volatility is definitely starting to get a little bit less minus this big day, right? It was just very, very choppy. Then we started trending up. We kind of rolled over. We're starting to roll back. So I'm wondering, can we get some sort of a VCP type pattern forming in the NASDAQ? Who knows? Maybe we will, maybe we won't, but just something I'm kind of looking out for. I'm not saying per se that it's going to happen, but something that I'm looking out for because we are starting to see some of that volatility dry up. And maybe this is that, higher low. So we made that lower low, taking out this over here. Now we rallied. Maybe we're creating that higher low over here. Time will tell. Let's just see. Just all things that I'm thinking about and looking at as I go into next week, so you guys kind of have an idea of where my mind's at. We'll look at the weekly very quickly. The NASDAQ closed in 94.19% range. We'll zoom in a little bit. We're back above that 10-week moving average. This gives you an idea of just this explosive off the bottom move, the roughness we've kind of had lately, and just really kind of trying to see where are we going to go from here, right? Are we going to break higher? Are we going to break lower? Is this start of like a downturn, or is this just a basing pattern as we continue another leg up? So we'll see. We'll look at the S&P just for the sake of looking, but honestly, way too much. Pretty much the same action, not much different. A little stronger, right? Not more of like a shakeout below the 50, not as much resistance. The resistance came more in at the 21. And then they have candles on here, but there you have your weekly on the S&P. All right, let's just go quickly and talk, because I skipped over this part, and talk about kind of key levels. On the upside, it's pretty simple. I have them both marked on here. We have the 1210 high is this big area that we want to take out. And then from there, it's that all-time high of 1029. Those are the two upside side areas that I'm really, really keeping an eye on. On the downside, your usual, all your moving averages. I think the most important right now is the 50. The 50 is also coinciding with an area where we kind of saw some resistance. Not that it's as important right now, but in the past that saw resistance. Then from after the moving averages, we start looking to the 1217 low, and then ultimately to the 1121 low. So we kind of have I'd say 1, 2, 3 main key levels that we're looking at on the downside. 10 and the 21, ideally, obviously, we'd like to hold above that, but not as important. So don't be surprised if we rally and see some tightness or even another pullback as we get to this area. Same thing as we get to this area. So keep an eye on that, and just something to think about. All right. I don't see any questions, don't see any comments. Let's jump over now then to Deepvue, and let's take a look at what is going on with themes and industry groups. If you guys don't know, I'm a Deepvue partner. This is the tool that I use for all my stock screening, all my chart analysis. One of the best tools out there. I really can't say enough how much effort they put into this tool to just make it where it has everything you need and more. Things I didn't even think I needed, like a theme tracker, and just making things a lot easier. So yeah, loved it. If you are interested and you're on YouTube, the link is in the description. If you are interested and you are on X, link is in my bio. And there's no more wait list for anybody who's coming back and is like, I thought there was a wait list. No more wait list. Everything's open. So check that out. All right. Looking at, so we got weekly, 1 month, 3 month, and year to date. And this is from the open is how this is showing. So no surprise, silver and gold miners, as they just continue to lead out the year, showing incredible strength. They showed strength this week. And the 1 month time frame, they're showing strength. You're also seeing some of the aerospace and airline stuff. I know a lot of people have been talking about a lot of the space exploration type of stuff. We saw some strength that in that area this week as well. Healthcare, biotech continue to be one of those areas that we're seeing, and medical seeing some strength this week compared to everything else. On a, where are we? Not as great on the 1 month time frame, but we're seeing like healthcare over here. Not too bad in the upper half over here, and genomics over here, and biotech up here. So healthcare, biotech, genomics, medical in general, definitely showing some strength. One of the other things that I wanted to do that I do for myself is look at just these overall sector ETFs, just to get a general idea of what's going on. Oops, not what I wanted to open. Just to get a general idea of what's going on with the overall trend of these groups. And we'll start off right here. We have consumer discretionary, definitely showing some strength as of lately. We're seeing some high volume coming into this, looking like it's starting to break out. So that's definitely a group to kind of take notice for. Technology. Technology was very strong. It looks like it's trying to see some VCP type of action as it kind of maybe tightens up and gives us an opportunity to get another entry. And I think we're seeing this in a lot of those technology stocks that they're questionably either forming a base or getting ready to roll over. Healthcare. Look, we've seen a lot of strength here. We started to kind of rally this week after kind of rough pullback over here after a big real rally. So this could be kind of basing. Materials, really more kind of sideways action. Communication, big kind of sideways base. And we're seeing a lot of this coming from September, where I think this is where things got choppy. And what I'm looking for is what had more relative strength. Financials definitely been showing some strength over the last couple of weeks. Utilities, not. Utilities looking like crap. Industrials, kind of flat, nothing really. Consumer staples, this coming off a bottom, but way too soon to call if that's something that I'd be interested in. Real estate, not looking good. And the energy sector, which is surprising to me right now, but we're below the 50 on here. So just a quick overview on those sectors. Now let's go to the ETF tracker. I throw this on 1 month because I think that's a good time frame just to see kind of what's showing strength, and not necessarily saying this is the leaders right now, but trying to be a little bit ahead of some stuff. And we got weekly over here, and we got daily over here. So first thing, cannabis. If you haven't heard, Trump was it downgrading the classification? I forget what exactly it was, but basically a good thing. Trump doing something good for cannabis. So we're seeing that here. We're seeing that here. We're seeing that here. That it was kind of popping off the bottom. But I don't know if we got some of that like sell the news type of stuff or if something changed. But this was kind of showing that 1 month relative strength as of recently. Silver, we already kind of talked about. We also talked about airlines. And now the reason I'm looking at the charts is just to understand, like, is this super extended? Is it forming a base? So right now, the airline stuff looking kind of extended. Silver looking kind of extended. Here we're looking like the miners might possibly have some sort of a small entry for maybe something else. Space, right? This space exploration, looking like this could be an opportunity coming in the future where, resuming that uptrend. This was kind of a deep pullback in base, maybe a little bit of a handle type of action here. Copper miners, gold miners, you see this in a lot of those. I think a lot of these are kind of past that breakout point that most people would be looking for, but we were talking about this for a while, for a couple of weeks, and that's what we were looking at. Metal mining, looking like it's possibly breaking out. Transportation, possibly pulling back and forming a base. Retail, possibly also forming a giant base type of action. Really, this would probably be where I'd look for getting some sort of an entry. But again, we're just looking at this for trends. Banks trading somewhat tight, and miners. So really looking at that kind of 1 month time frame, you're seeing some of these names are just, some of these industries are fairly extended. Some of them are starting to make a turnaround. So just something to give you guys a look as what's going on under the hood. All right. So let's talk exposure levels, right? How do we approach this final week into the year? One word. For me, at least, it's patience. We did have a strong Friday, right? But that does not necessarily mean that we are completely in the clear. It was one day, maybe a day and a half if you want to count Thursday, despite the fact that the close wasn't great and we got it rejected at the 50. But it really was just one day. We have the retake of the 50, the retake of those moving averages, the possibility of a higher low, all these things being positives. But at the same time, like there's just still some weakness in the market as we saw a lot of selling in that pullback. The hive, we're not seeing a lot of follow through in terms of volume to the upside. Still some overhead resistance in areas that could cause us some trouble and some volatility. And still in that kind of sideways action, choppy, harder trading environment that we've seen from the beginning of October. So in terms of exposure, if you have positions, and I think this varies a lot for the trader, right? If you're a more longer term trader, maybe closer to like an investor, CANSLIM investor, you very likely could still have some decent exposure based on the fact that your stops have not, been hit. If you are more of a shorter term trader, maybe you're trading in and out of some of these swings in the market. For that kind of medium term position trader, which I think I tend to fall more into, where I'm like buying these breakouts, I'm trying to hold them for like that 21-day average run, and get some decent gains out of those. It's a little tough. Like you probably got stopped out of a lot of stuff and you're not likely having many positions. With that being said, I think a decent amount of exposure, depending on your time frame that you trade, is warranted as long as your stops haven't been hit and things are acting healthy. Personally, if I'm floating around like that, I think you should be between that like 40 and 60% range. I'm slightly lower than 40 because I did get stopped out of things. Currently, right now, all I own is 5. That's the only position that I have, but it has triggered. It's been acting healthy. So in terms of new buys, though, have a list, be ready, but also be cautious, right? Just one strong day, especially going into a Monday. If we see that typical Monday morning gap up, don't just start slamming on that buy button, like buy, because that could just be one of those Monday morning gap ups. And we've seen that happen many, many times this year where things just reverse and people get stopped out in the same day. So be patient going into next week. Be prepared. If we do start to see some follow through, things start to look a little healthier. We're starting to see big bases, broader move, breakouts. Then be ready to make those purchases. Know what your plan is. But really, for me, I'm just trying to be a little bit more patient, especially going into that Monday morning possible gap up. All right. Other than that, nobody's dropped any stocks in here. So nobody's, and I didn't actually solicit, but I feel like most of you guys know. Oh, never mind. We just got it. Okay, Brian. Perfect. Right on cue. All right. So let's go to Brian first. You want RTX. Let's look at stats table, data panel. All right. Bear with me as I'm just getting set up. All right. So from a fundamental standpoint, looking at RTX, what do these guys do? Aerospace and defense. All right. So you're in that right industry, right? That's positive right off the bat. The quarterly earnings, look, good last quarter. Overall, we're trending upwards, which is positive. Sales are kind of lackluster. Oops, good call. I always do that when I switch back and forth. All right, so here we go. RTX. Like I said, we're in that aerospace area. So that is a good thing because we just saw we're seeing strength in there. Overall, the earnings, it's okay. It's not amazing, but it's not bad. Sales, not that great. Okay, but like I wouldn't say absolutely no to this for myself, but something that's just on the lower side. From an annual perspective, last year was a nice year. Kind of same with the sales, nothing that would be great, but also nothing that turns me off completely. We're seeing the institutional sponsorship continue to grow little by little. The strength over the 12-month, great. Over the 3-month, okay. Over the 1 month, not great. Lower ATR stock, which can fare well. ROE is okay. So you're just getting an idea. I mean, this isn't something that I would instinct, but it isn't something that I'd be like, oh my God, I need to buy. Also, I don't know if I'm actually allowed to buy this. Oh, did we just lose connection? Oh, we're back. Okay. All right. So base though, if you bought this on, what was this, Friday, with that high volume breakout to all-time highs, with the pullback right there, with a I mean that if you bought this on Friday, I love that. All right, we had the pullback here. We kind of broke the 50. We tightened up a little bit down here. We started seeing some high volume as we got to those all-time highs. We didn't form that handle. It got kind of extended. If you didn't buy here and then it kind of just let it be patient, let that pullback happen. The pullback kind of came in. It gave you now a little handle of like a 3% handle. Oh, dude, I like this. I love this. That's awesome, Brian. So you got, I don't know what your stop plan is, but I like this kind of low on the 17th. Using that low of that handle, that's a little 3% area. So if you wanted to maybe even use that as like a half stop, and then you could always, if you wanted to really, really hold on to it, maybe use like the 21, or you could just full stop at that 3%, which is probably what I would do in a market like this. But yeah, this is great. High volume breakout. The industry group in general is doing well. Yes, there's some fundamentals that aren't 100% perfect, but I like this kind of cup, little handle, high volume, all-time high breakout. Yeah, nice one. LIT. And anybody else, feel free to drop any. Click. Feel free to drop any. Jesus, can't click anywhere. What am I doing? All right, there we go. LIT. All right, LIT. All right, this one, and this is why I brought up the weekly. This one is kind of extended. So I know there is this little couple day pullback to the 21. If you're that type of trader and like trading off those pullbacks and maybe swings off of there, fine. Not my kind of thing. To me, this has just been extended since when I was looking at it all the way back down here. And you saw the volume come in. This thing is kind of ran up. So this to me just kind of extended. Not much of a digestion here, but still, this is great. The relative strength in this is beautiful. Beautiful. Yeah, not much more I'll say about this. I think a lot of people have looked at this name. The fundamentals look good. They broke out of here. One of those few names in the recent chop that has done fairly well. Definitely high ATR stock, so might been a little rough to ride this one, especially when you got 10% drops in the day. So this just shows like, yeah, this looks like, ooh, this is a beautiful stock. Had I bought it right here, this would have been great. But then you gotta have the market drop in, have some of these 10% declines, days like this, 13%. Like, yeah, it's not as easy as it looks on here. But yeah, extended for me. MU, which actually I had on my list to bring up too, so we'll bring this up. Really, really watching this. I had bought this back here. And as kind of like an early entry as the market was starting to shape up. And then I got shaken out of it. I think I stopped myself out at like a 2% overall, somewhere around there. I forget, I'd have to look. But so I was really, really watching this, right? The fundamentals look great on this. I was hoping, looking back on it now, kind of stupid. I didn't have that much time going into earnings, given how the market was, but whatever. Stopped myself out. We sold off going into earnings. We had the earnings gap up with the poor close. Did not like the close on this Thursday. Didn't like how we gapped up real strong, kind of rallied, and then rolled over. But is what it is, because we did follow up on Friday, which was super, super positive. So my concern here with entries, if you bought Friday, probably okay. This is my concern right now, is this could easily pull back again to its 50. It's shown that that's kind of its nature. And I'm not sitting there for 17.56%. Just not what I'm willing to do. Where I had bought, actually, I think I bought a little deeper, but I had bought where I basically had like a 7% stop, and I was kind of comfortable with the risk I had put in on that. So just something to take note of. Yes, we're kind of breaking out. Yes, there's a ton of volume coming there. Just understanding sometimes even if the market decides to pull back, maybe we tighten up again and get like a VCP pattern, or just technically like a squat coming out of this kind of breakout that we could. It's just deep. So just understand where you're going to place your stop. It's kind of hard to put a good technical stop. Might have to just be more of a risk stop, as I would call it. NEM, another name that we have been talking about kind of every single week, is just those gold miners, metal miners. So this one, this to me is the leader within that space, for sure. You kind of had really what I think for me, what the proper entry was right back. Excuse me. For me, what that proper entry was going back to the 9th. We really tightened up. We kind of had that VCP action. We had the breakout here. The volume came in the next couple of days, and now we've kind of tightened up around here. Now that we've kind of got to those all-time highs, we're a little far off those moving averages. To me, you're kind of extended. And even from a pure CANSLIM basis, what are we? You're very close to that 5%. You're getting closer to like that 3% from that like overall pivot point over here. So even this day right here on the 11th would have been a good day to buy, especially for like that traditional CANSLIM breakout. But I would like to see this tighten. I would like to see the moving averages come a little closer, give me somewhere to kind of have my risk line at. I did not buy this. I kicked myself because I had been talking about this many, many times. I've said this on here a couple times and just never bought it. And this is where the psychology side of things comes in. But yeah, I'm fine with this going on without me and just being like, oh, well, is what it is, especially given the market that we're in right now. I'll bring it up just because I said I own it. 5. So this is done well, right? We had volume come in there. Things are looking healthy. Started to tighten up. Hopefully the moving averages can catch up and this can get another leg. But this is why I haven't sold. This hasn't even closed below its 10-day simple moving average. So, and if you want to see, yeah, no problem, Brian. Anytime. And anybody else, I'm still here. Throw them in there. What was I saying? Reddit. This is another name that I kind of early entry, thinking the market was starting to move, that I'm still actively watching. Really, really watching right now. If we go from here to here, that's kind of a big dip. So looking to see if we could really form more of a true pattern with maybe possibly a handle, some sort of VCP pattern, some sort of a way where I can really assess my risk. Right now, I think the area to watch is how we act right at this little peak over here. As you see, we got rejected on Thursday, but watching this name, definitely watching this name. We talked about MU. This was one of those more high volatile names that I had bought that just kind of shook me out on the 15th. Insurance was acting well. I took kind of like a IPO kind of, I don't know if you really call it an IPO base, but really just kind of like a trend change type of pattern. And that just washed me out. So, all right. Doesn't seem like anybody's got any other names. So let's just go. And if you do, we'll jump back. But let's just go into final thoughts while I give you guys some last minute times to think. Biggest thing, be prepared going into next week, right? Keep a strong watch list. Do the work over the weekend. Screen for stocks. Really go through each chart. Know where your stops are. Know where your entries are. Rank them to know where your number one, your number two, your number three, and so on and so forth stocks are. And your A tier, your B tier, C tier, how I like to do it. Be patient. Don't let that like I said, don't let that Monday morning gap up. That real strong move be like, oh my God, it's happening, and just start smashing the buy button, and then we roll over, because I think that could be very possible. But just be patient going into Monday. I've had that save me many times this year, where I've seen that big morning gap up, and I'm like, oh, just don't hit buy, don't hit buy, don't hit buy. Just wait. And sure enough, I waited. Things pulled back pretty aggressively. Sometimes I was able to still buy because it was still in, the daily was actually where I wanted it in terms of my entry. And other times I just didn't end up even buying it, and the thing rolled over. So sometimes patience is a good thing. I know everybody trades differently. That's how I look at it. Just remember, listen, there are times where we want to have our pedal to the floor. And earlier in the year, that was the time. Most of us were fully invested. Most of us were, buying, taking profits, and just taking money from the market throughout the, kind of middle of the year, middle of the year to about the end of September timeframe. And then things kind of got a little whipsawy, a little choppy, and a little more difficult. And when that happens, it's very hard, but it's very important to kind of let off the gas. Doesn't mean you have to completely take your hands off and say, I'm not buying anything. But I try to make those buys smaller. I try not to be full on into the market until we see some more confirmation, as we started to see that chop. You can handle getting stopped out of a lot of trades and testing the market when you're got the right risk and you're not heavily invested. If you keep going, every time we get some light shining in, you go, I'm 100% invested, buy, and then you're getting stopped out 4, 5, 6, 3%, 7%, maybe even 8%. And you have that happen after a couple choppy moves 3, 4 times. It eats into the gains that you have gotten through the year. And it eats into your mental capital so bad when you just rack up those losses. So just be patient. Let the market confirm itself. Let's see some follow through and see if Friday's action was real, or if it was just kind of like a dead cat bounce and we roll over from there. Risk management, psychology are everything. That's why I'm looking and saying these things. Stay disciplined. Keep doing the work. Be prepared. That is the most important thing. Brian, with it being late in the year, we are still technically in a Santa Claus rally mode. So for anybody who kind of knows me, I don't like paying attention to the Santa Claus rally. This month's, historically the best month. This month is a horrible month. We've seen many, many times this year where what is, historically a good or bad month, or this happens this time of year, the market didn't act that way. I actually try to completely ignore it, because I know myself. I know that if I put that in the back of my mind, the way I look at the market is going to be skewed in that direction. So if the market is if history says this is going to be a bad month, I'm looking at things in that kind of lens. If it says it's going to be a good time, I'm looking at it in that kind of turn lens. With the Santa Claus rally, the real true Santa Claus rally is just like basically that like last week going into the new year. And I think it even technically counts a week or two into the new year. And it's just because people are, not really selling anything and deferring their taxes into the following year, from how I understand it. So look, it depends on, number one, the style of trading you do. Because if you're maybe a real short-term trader, that might be an opportunity where you know things are going to maybe take a couple legs up. But especially if you're more a precision trader, like a couple good weeks, if that's not real true sustained, does that really matter to you? I think everything else that we're looking at, overall market, how stocks are acting, that's much more important than just even thinking about what that Santa Claus rally is. To me, not needed information. People can share their thoughts and opinions on what they think about that. And if they think I'm being stupid because, well, historically, that's fine. Just not something I pay attention to personally. But yeah, and actually, this is while we're talking about this topic, I believe it was IBD on YouTube had a interview, or it might have been like one of those monthly market reports with Jim Roble. And they were talking about this very topic. They were talking about the Santa Claus rally at the end of the year in December and beginning of January. And what was interesting to me is you have people interpret that very, all different ways. Jim Rople was saying, well, because we've had such a strong move going into this year, it's likely that we're going to see this. And then I forget whoever was the host said, well, I've also heard that because of this happening, that historically when this happens, the end of the year looks like this. And it was like, well, but this also happened. And when that happens, the end of the year historically looks like that. So it's like not just this blip of it's the Santa Claus rally. Like there's a lot of other factors that play into things. And whether or not people are, acting as people expect in the classic Santa Claus rally. And if you watch that video, you'll see why me personally, I just don't pay attention to it, because there's just all other factors start playing into these things. If it was that easy, then people would just dump their life savings in right before the Santa Claus rally every single year, and make a decent percentage, and then probably sit back and not trade for the rest of the year. So, but yeah, check that video out. I think just thinking about it in the lens that I just mentioned, where how people are talking so various, like, oh, we're going to see selling, we're going to see buying, we're going to see nothing, we're going to see this. They're all talking about the Santa Claus rally, and history says, but they're all coming to different conclusions of what may happen. So that's why, to me, it's just look at what's in front of me, look at the data, and assess things day by day, as I always do. No different from any other time of the year. All right. That is all we got. Don't see any other questions. You have YouTube, you have X, you have description on YouTube has the Discord link. If you're on X and you want Discord, just shoot me a DM and I'll get you the invite over there. Email, if you want that ETF list of all the ETFs. I used ChatGPT, played back and forth conversation with ChatGPT for probably about a couple of days, and built out my ETF list. So there was a lot of work that went into it, but I didn't curate those singly by myself. So if you do want that, just shoot me an email, title it, send me ETF list, and I'll send you the Excel sheet that has it broken down in categories, the master list, kind of everything. It's pretty well organized. And then you could dump it into whatever platform you use. It should be Deepvue because it's the best one out there. Just saying. But yeah, I can get that over to you. No problem, Daytona. Appreciate everybody joining. Thank you again. Always enjoy these. It's always fun to kind of sit down. If you're watching and you haven't commented, stock, question, anything, next week, look, there's another week. There's no way you don't have something you want to say, whether you agree with me, you disagree with me, or there's a stock that you're looking at. Just throw it in there. That's what makes these real fun for me. So please do so. And if you're watching, whether this is live or if you're watching and this is a replay and you're not subscribed on YouTube, definitely subscribe on YouTube. Once I decide what time I'm doing, I always post it on YouTube. And sometimes I forget to share it. Sometimes I don't, but you will be notified when we're doing the live. So subscribe there, where everything gets saved. You can watch those replays. All right. That is all I got. Hope everybody enjoys the rest of their week. Merry Christmas to everybody who celebrates Christmas, because that's going to be before the next episode. So I didn't even think about this. This is technically the Christmas episode. So enjoy time with your family and your friends. And yeah, other than that, I will see everybody.